welcome to another Major Market Movements video blog update for November 6th, 2014. I'm Quad G. In this video, we're taking a look at the natural gas market. Starting from a close-in view here, wanted to point out that back on October 28th, I sent out an intraday alert to subscribers, letting them know that this pop-up here was an indication that this previous ending diagonal had concluded, and it was time to see this ending diagonal retrace to the upside, most likely in an impulsive move. So here were some trade setups for the move that was expected to come. And you can see here's our buy zone for NGF, the natural gas contract for NGF 2015, and over the next roughly 24 to almost 48 hours, the price dipped inside that zone for a while, and then it started to take off. And you can see here today, we're right up here to the $4.50 level from the roughly $3.80 level. So a very nice profitable move to the upside so far. And I wanted to point out how one of the principles of Elliott wave movements is that once a ending diagonal is completed, it is very likely that the counter trend move, the retracement of the ending diagonal, is very likely to be impulsive, and it is likely to retrace the ending diagonal in as much time or less time than it took for the ending diagonal to develop. So you can see here there was several days here to the downside and quite a few less days to the upside was required to retrace this ending diagonal from its origination point, which is all the way back up here at $4.17. So that's a very classic textbook move for a completion of an ending diagonal, seeing a full retracement with impulsive behavior. And with this move, we have now set a key support or even critical support here at $3.54 for the midterm or even the long term if this upside move, like I expect, will continue on for months to come. So let's move on to the next slide. Also want to point out that the market had been developing over the last few years a bullish inverted head and shoulders pattern. And here we have the left shoulder, we got the left neckline point, came down into a head and has moved up recently in the early part of 2014 into a right neckline and has since dropped into a right shoulder. And I believe this Elliott wave pattern is finished, and we're starting to see the reversal. If this right shoulder is in fact complete, then once we break the neckline, perhaps roughly around here at about $6.60 some odd cents, we should see. It's very possible that there's about $4.40 or 4.40 points potential from the head to the neckline that could be tacked on to the neckline breakout point. So possible charge up here to the $11 level in the months to come. This is by no means, this would be an initial target. The price certainly could move above that point. This is just simple head and shoulders projection dynamics that I'm pointing out here for you. All right, so here's our long-term Elliott wave count that I've been working with for a number of years now. I identified this pattern, back in 2011 when this triangle was nearing completion. And I was looking at it as wave one had finished up back here in 2000, and we since had this choppy sideways 3 waves down, 3 waves up, and 5 waves down flat pattern for a 3-3-5 flat forming a major 2 bottom in the price that was just under the $2 level. Also, one thing that really helped out this whole projection was the fact that wave 4 did trace out as a triangle pattern. We got the final thrust to the downside for wave 5, and once that was completed, if we zoom in here, you can see that wave 5 completed with a inside triple key reversal on the weekly. Once that took shape, that locked in this major low, and for that weekly candle pattern, we then saw a 5-wave move to the upside for wave 1, wave 2 pullback, another sub-wave 1 to the upside, which completed early 2014, and we've since worked on what I see as a double zigzag to the downside, which completed here just recently. Last week, we did see the price of natural gas pull an outside double key reversal on the weekly, and we're definitely seeing fall through to the upside this week. So that should cause wave 2 to be finished, and critical support is in at 354. So as long as the price of natural gas, if we do get a pullback, it should stay above 354, and at the end of that correction, we should continue to see continued advancement to the upside. Now, if this count is in fact correct, this next move up, once we clear 650, we should get a point of recognition somewhere in here, and the price should continue higher into wave 3 of 3 of 3, which if you measure it out in a moderate way of calculating, and the Elliott wave moves, $24 is possible for this move over the course of the next couple years. You can also see that this price move to the downside, once this peaked back here in about the summer of 2008, the price dropped off very radically in a manic move that was never retraced. So at a minimum, I do expect this move to come up and fill in some of this void, some of this mania to the downside at a very bare minimum. So $11 to $12, even $13, $14 range, somewhere in here seems like a very moderate projection, even if we do not see the 3 of 3 of 3 to the upside. With even a $12 move, here we're back here in the $3, $4 level right now. We still got 3 times the price potential to the upside is what I'm seeing as a minimum. All right, so I want to move on to the solar cycle. I think the solar cycle has played a significant role in the price of natural gas. I do think a lessening of solar activity does create a decrease in global temperatures, and with that, it creates a higher demand for energy, and natural gas is a chief source of energy for heating homes around the world. And so what I want to point out to you here is the solar cycle 23 topped out here in about mid-2000, and we got a secondary peak in about late 2001, and then from that point the cycle had seen diminished activity down into 2008, 2009, roughly ending here in about late 2008, and then starting to see recovery at the end of 2009 up into solar cycle 24, which formerly peaked there at about late 2011, and it came down. This graph isn't completed. It's only finished. The last points of data here were in late 2012. So we didn't see one secondary lower high in right about that time, and the solar activity has come down, started to drift down since. So if we take a look at the natural gas chart, which should be inverse, the behavior should be in price of natural gas should be inverse to the solar cycle if my theory is correct. And so here we have the beginning of the solar peak in 2000, right about here, and we started to see the market perhaps anticipating the end of the solar cycle with producing the first higher high. The price then came down into a higher low, and it's since trended upwards with higher highs and higher lows into the about mid 2008, that summer of 2008, when the solar cycle trough ended and started to reverse and move higher. We got our lower high in the price here at about $13. That was the end of that solar cycle trough, and with the increasing in solar activity into 2001 or 2011, excuse me, we started to see this major downtrend in the price of natural gas with a lower high, lower low, another lower high, and then that final lower low back here at the end of 2000 or beginning of 2012, right there at just under the $2 level. And since then, we've started to see an uptick in the price. So I do think that if we did see a major run up basically for about 8 years or so in the price, major uptrend in the price of natural gas from 2000 to roughly 2008. So if we're just beginning our cycle to the upside in natural gas prices starting right here in 2012, it's late 2011, early 2012, we could see roughly, I'm guessing, 7 to 8 years more of upside prices to come. At least possibly the final peak about 6 years or so from this point. So tack on 6 to 8 years from 2011, 2012, and you end up with a possible trend to the upside that lasts into roughly 2017 to 2019 is what I'm expecting at this point in time. Of course, I think that's based upon my Elliott wave analysis. That's all going to depend upon the price keeping above that key, if not critical support at $3.54. Okay, so that's the end of this review of natural gas. I hope that if you are a trader or you're an investor and you're wanting to get in on what could be a major market move to the upside, come and check out my service for free for 30 days. And you're welcome to sign up, review the service, see if it works for you. And if it doesn't, you certainly can cancel within the 30 days for no fee, no charge. And if you decide to stay on, hopefully we can help you get in on this trend with a decent low risk pullback in price fairly soon and enjoy a fantastic run to the upside over the course of several months. Okay, that's it for now. Adios.